Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings in the fourth quarter of 2022, and that stock is General Electric. And we can see that over the last year, General Electric is up around 15%, while the rest of the market is down around 7%, so they are outperforming the market over the last year here. And so in this video, I'm just going to figure out what the intrinsic value per share for General Electric is, and then also look into some of the recent news that's come out surrounding General Electric. And we'll get into the news first right here. So we can see that they point out that some of the forecasts for General Electric were not that good, mainly because of some troubles with their renewable energy business. We can see if I scroll down here, they point out that some of the inflationary headwinds right now are really making it difficult for General Electric to grow their business. And they're not the only ones. We can see 3M and Raytheon Technology Corp basically reported some of the same problems. And we can see if I scroll down here, they point out that Raytheon expects labor and material inflation to cost it about $2 billion in 2023, and 3M said that inflation was boosting the cost of raw materials and logistics. If you scroll down here, we can see that GE basically forecasts that operating losses are going to be between $200 million and $600 million for their energy business, GE Renova, in 2023. And on top of that, for 2022, for their energy business, due to inflation and supply chain pressures, they reported a loss of around $2.2 billion in 2022, so not very good news coming out for General Electric here. And so right here in their financial statement, so I go to page 44 here, we can see this is their income statement comparing 2020 to 2022. We can see that total revenues are up from $74 billion to $76 billion, so that is pretty good growth, around 3% year over year. And in terms of net earnings, it's up from net loss of $6.5 billion to $292 million net income. But this is a little weird because we can see that in 2020, it was around $5.5 billion. So it's kind of inconsistent. It goes from like up to down, back up to $292 million. So it's kind of difficult to predict where their earnings are going to land in the future. For their balance sheet, we can see total assets are down from $198 billion to $187 billion. And we can also see that most of their business is financed by liabilities as opposed to equity. They had around $37 billion of equity and $150 billion worth of liabilities. Lastly, in their cash flow statement, we can see that they had around $5.9 billion worth of operating cash flow in 2022, up from $3.3 billion in 2021. And then also we can see they returned a little bit of value back to shareholders, around $639 million back to shareholders in way of dividends, and then around $1 billion spent repurchasing common stock. So it's not that much value, but it is more value than prior years for General Electric. And so right here, we can see this discounted cash flow model to figure out the intrinsic value per share for General Electric. Yahoo Finance is estimating that they're going to grow at around $44 for the next 5 years compounded annually. That's a little optimistic for my liking, but that is the value that they provided. We can see that in their most recent full year, they had around $4.5 billion of free cash flow, net debt position of $13 billion on their balance sheet, and a little over 1 billion shares outstanding. That puts their intrinsic value per share at $271 per share, which means that at the moment, they're currently trading below a 50% margin of safety. They have a trading price right now of $83 per share, and the 50% margin of safety is $135 per share. So based on these really optimistic growth rates, looks like they are trading below intrinsic value. But I'd encourage everyone to do your own due diligence and not rely on the idea that GE, or really any company for that matter, is going to grow at 50% compounded annually for the next 5 years. From this competitor analysis, we can see, comparing them to some of their competitors in the industry, that GE has a better gross profit margin than Lockheed Martin and Boeing, two of their main competitors. But Lockheed Martin is doing better across the board in all the other areas pretty much. Better net profit margin, return on assets, lower PE ratio, and better dividend per share. So from a competitor analysis perspective, you'd probably want to invest in Lockheed Martin. Interestingly enough, it looks like GE is actually overpriced if we're looking at their PE ratio, but underpriced if we're looking at their intrinsic value. So that is definitely something to keep in mind. It could be a little inconsistent, mainly as a result of this outlier growth rate. And lastly, to end off the video, I wanted to compare them to some of the other videos or companies we've talked about in past videos. We can see that we finally have another company trading below intrinsic value here. GE is trading at 0.31 times their intrinsic value per share. Albertsons is the only other company to be trading below their intrinsic value. In terms of growth rate, we can see GE is sitting at the top now with a 44.5% projected growth rate. Keep in mind that Albertsons has an 8% growth rate and they're coming in second place in terms of intrinsic value. That to me is a little bit more believable than General Electric's 44% growth rate coming in first place for intrinsic value. Because obviously, if you increase the growth rate, you increase the intrinsic value estimate. So it's pretty easy for a company to be trading below intrinsic value per share if they have a very high growth rate. Not that easy if they have a low growth rate though. So Albertsons is still pretty interesting, in my opinion, a little bit more interesting than General Electric. In terms of profitability ratios, we can see General Electric has a 27% gross profit margin. Net profit margin was only about 1%, as we can see right here. So they didn't make it onto the net profit margin table here, top 10 table. And in terms of stock performance, GE comes in dead last at negative 6.5% for the last 5 years. So that is not very good. Number one spot still goes to Microsoft at 191%. So it looks like in terms of comparing them to the other companies we've looked at in terms of profitability and stock performance, they're pretty close to the bottom here. And then in terms of growth rate and intrinsic value, they are right at the top. In terms of competitor analysis, you probably want to go with Lockheed Martin. And based on these projected metrics here, looks like they are trading below intrinsic value per share. So not sure what to think of General Electric. Let me know in the comment section down below what you guys think of this company, if it's a good buy or a sell right now. Let me know what you guys think. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.